Dear professor friends, welcome to fourth episode of GST Weekly Updates. We are excited to see your overwhelming response to our last video. There is no news notification, circular or clarification issued by department between last episode and this episode. Keep on watching our video till end. Before end, we will be taking up all the queries and questions received by us during this period. Let's begin with critical case laws that are important for you, your business, or for your clients. First case is landmark judgment by Jharkhand High Court that significantly impact the transition from state value-added tax to GST regime reported in 2024 NTN volume 84 February part 1. In this case of Subhash Singh, Choudhary versus State of Jharkhand, taxpayer challenges the denial of their right to migrate the tax credit from Jharkhand VAT to the GST regime. The crux of the matter was whether the tax deducted at the source, which is TDS under Jharkhand value added tax, could be transited as or transferred as a credit to the GST regime. The court observed that the transitional provisions are crucial when shifting from one tax regime to the new tax regime. They explained the legislative intent to allow unadjusted taxes paid under the previous taxes to the new regime. The court ruled that restricting the migration of TDS to GST regime are contrary to the law's purpose, the very purpose of GST, and thus denying the migration of TDS and imposing the penalties for not doing this is not legally sustainable. And the court concluded, and the decision that ensures a smooth transition of GST for taxpayers with unadjusted TDS and uphold the principle that legislator should facilitate, not hinder, the process of tax credit migration. The ruling by Jharkhand High Court marked a significant step in clarifying the transition provision under GST framework, benefiting numerous taxpayers. Next is key discussion by Bombay High Court in case of Ashapura Steel Metal versus Union of India concerning goods and service tax. The crux of this case was whether state tax officers has the jurisdiction to block the indirect tax input tax credit ITC under Central Goods and Service Tax Act. The petitioner Ashapura Steel Metal argued that the state tax officer lacked the authority to block ITC under Rule 86A of CGST Rules. The court analyzed the interpretation of CGST Act and Maharashtra Goods and Service Tax Act, highlighting the need for a harmonious interpretation of both these acts. The court found that the power conferred on the state officers under Maharashtra Goods and Service Tax Act as permitted by Section 5 and specifically authorized by Section 6 of CGST Act extend the CGST Act and includes the authority to involve the Rule 86 of blocking ITC. The ruling underlines the integrated nature of GST, CGST and State GST Act, ensuring that state officer has the necessary power to regulate ITC under both the regimes. The Bombay High Court decision reinforced the collaborative framework of GST system in India, ensuring uniformity and efficiency in its administration. This judgment is a significant step in clarifying the jurisdictional aspect of GST, particularly regarding the blocking of fraudulent ITCs. In next case, focus is on significant ruling by Madras High Court in case of Luminous Power Technology Private Limited versus State Tax Officer pertaining to GST laws in India, reported in 2024 NTN Volume 84, February Part 1. This case revolved around the detention of solar panel by GST authorities. These panels were returned by the buyer due to damage, and the company Luminous Power Technologies was retransporting them with the fresh e-way bill. The critical legal question was whether the detention of goods and the demand for the penalty were justified given that the credit or the debit note did not accompany the returned goods. The court examined sections 34 and 129 of CGST Act. Section 34 deal with the issuance of credit note for returning goods, while section 129 concerned with detention and seizure of the goods. The court found that the detention was illegal and unwarranted, specifically since the goods were accompanied by valid e-way bills. They highlighted that the credit note are meant for adjusting the tax liability in the books and are not required to be physically present with the returned good along with e-way bill. This judgment clarified the provisions relating to the return of goods under GST, and this is very important, and it also emphasized that the physical presence of credit or debit note is not mandatory during the transportation of returned goods. The court decision provides significant relief to the business dealing with the return and highlights the proper interpretation of GST law concerning the transport of returned goods. With this ruling, Madras High Court has set a precedent ensuring a fairness and legality in the GST regime's enforcement. Next is a significant judgment by Delhi High Court in case of National Internet Exchange of India versus Union of India, focusing the goods and service tax refund process, reported in NTN 2024 Volume 84, February Part 1. The case addresses whether the adjudicating authority was correct in rejecting GST refund application on the ground it being filed belatedly. Under Section 54, subsection 1 of CGST Act, a refund application must be filed within 2 years from the relevant date. And Rule 89 of CGST Rule stipulates how application should be made. The petitioner filed a refund application accompanying all the required documents but faced rejection due to discrepancies noticed by the proper officer and the demand of proper officer for additional information, sometime irrelevant documents. The court analyzed the applicant is complied with Rule 89 Sub-Rule 2 of CGST Rules. It also find out that the petitioner's application was complete and should not have been disregarded. The court ruled that the application for refund could not be rejected on the ground of or on the basis of limitations, emphasizing that the period for filing a refund stopped running when an application is correctly made, regardless of the additional document required by proper officer. The decision is a relief for the taxpayer, clarifying the process for GST refund and ensuring that the technicalities does not hinder the rightful claim of any applicant. Delhi High Court's this ruling underscores the importance of adhering to the legal provisions in the GST framework, particularly matters relating to GST refund claims. The next is a crucial ruling by Delhi High Court in case Commodities Private Limited versus Assistant Commissioner CGST Delhi South, focusing on GST refund related to export, reported in 2024 NTN Volume 84, February Part 1. The case centered on whether the authorities were justified in rejecting a GST refund claim on the ground that it failed to establish a direct correlation between input and the export of commodities. The petitioner, Case Commodities Private Limited, correlated that the input for which the ITC was claimed and that directly relate to the export of their commodities, which was sugar, and the tabular statement was made and submitted to substantiate their claim. The adjudicating authority and appellate authorities had earlier rejected the refund claim. However, neither of the orders discuss in detail the statement submitted by petitioner or invoices or other material provided by petitioner, nor did they give reason for considering these materials were irrelevant. The High Court found out that the lack of the discussion or reasoning in the order was a significant oversight, and it directed the appellate authority to examine the petitioner's material and to find out that if there is no correlation to the export of sugar, then they have to explicitly state this as a reason. The judgment underscores the importance of detail and reasons of decision making in GST refund cases, particularly when there is a linkage between input tax credit and export. With this critical ruling, Delhi High Court has reinforced the principle of transparency and accountability in the adjudication issues of GST refund claims. Now it's time to take up query. We got one query from Mr. Pankaj Verma from Pune, and he want to know how can we amend trade name on GST portal and what are the documents required for such amendments. For such amendments, there is no need of attaching any document or submitting any document. You have to go to the GST portal and go to the core amendment and you can change your trade name. And again, I'm repeating, there is no need of submitting any document in case of changing the trade name if the registration is for the proprietor. Next query is from Deepak Kumar of Greater Noida, and he has asked, can one file annual return if he has missed one of the monthly return for that financial year? The option of annual return is only available if one has filed all his monthly returns. So he cannot file annual return if he has missed monthly return. Thank you for watching. Don't forget to like, subscribe and hit notification bell so you never miss out our latest videos. Keep agile till next week and stay connected for more exciting videos.